Okay, there we go. Get this out on Twitter. Y'all know the drill. I'm going to look up and it's going to be Paul. I just have the feeling Paul's going to be the first one. Fairly consistent. Oh my goodness, what a busy morning. I'm actually excited to see what's going on in the stock market. I ended up missing almost all of Clay Rowe's stream. I hardly had a chance to even listen. Didn't lost track of what time it was. I do like having to crunch this down in order to see the whole chart of the day. Grant, I don't like the rundown we had to start. Well, actually, I had to run up to start. See, I didn't even get to see any of this. Hey, Paul, how's it going, man? TGIF. Thank goodness it's Friday. Oh, I logged on. I just saw this. I logged on, was setting up the live stream. I saw this nice run going upwards. Like, man, if we can carry that into next week. Looks like a lot of excitement in the first half hour or so of the market. What was first 15 minutes, then pulled back, then the rest of the first half hour. So what did I miss? PROG neutral on the day. Kind of bouncing around there. Tesla moving upward just a bit. Looks like, what's that, like 3%? 3.33% on the day. Still running ahead of that ascending level of support that I'd built out. There we got the SPY. SPY's looking good. I already know, but I'm still going to go and look at them anyway. Q's looking good. The major indices for the most part follow each other, so if you're tracking one, you might as well be tracking them all. Yeah, not that much of a deviation between them. Hey, Cassie, good afternoon. How's it going? So yeah, I popped in on. I was listening to Clay Rowe stream like the last 30 minutes of it. I typed in a few comments there. I don't think I actually heard any of them get read, so I think today I was invisible on Clay's chat. Nothing wrong with that, but I was popping in, and I know Pringleton was asking about them taking away the buy button and what's to keep them from doing it again. And my response was, well, the fact that the entire world will be watching. It's like, they played that trick once already. We've seen that trick. So if they play it again, we know that it's flat out manipulation, and any market maker, market mover that pulls that again, that uses let's take away the buy button again. They're done. They know they have to be done. They will lose the trust of every investor on their platform, and not just because everyone will initially be outraged, but when social media starts blowing up, Robinhood did it. They'll have pictures of Britney Spears on there. Oops, I did it again, and knowing that they intentionally did it. So I don't see them taking the buy button away again, because they've played that trick. Everyone knows why they did it, and they know the excuse they used. They know they were full of it. Everybody knows they were full of it. Oh, Simon jumped on your live stream. That's cool. Yeah, I had actually yesterday, while your live stream was going on, I jumped on. I posted on Twitter that you were live, and for everyone to drop by and smash the like button. So I guess he noted that on there. He may have already seen your channel before, but yeah, that's cool that he was on there. Community helping each other. Options. Oh, I want AMC options. I want to. Not today. Not 2 weeks from now. Well, maybe what's today looking like? We're on call. Yeah, not today. Well, I was looking at some covered calls, but there's, yeah, nothing in the covered. The only ones are at the 550, and that's less than a quarter away. There's no way I would risk on that. So let's start looking at next week's options. I'm ready for upward momentum next week. So I'm already starting to plan out some moves for next week, especially since they open up a lot of contracts at the 50-cent increments. That means I can really fine tune a strategy. I followed the link and it said it was private, but then last night it popped up as new video. So I like, hey, that's cool, Cassie. Yeah, that's yeah, I've actually ridden along with Paul a few times doing snow removal. So yeah, I'm just looking and trying to see where a nice place to get in on some bull puts for next week might be. I want to jump out on the 30. So it looks like, how far back does that go? That's about, goes back middle of January, and I don't think we really got too much lower. Yeah, okay, so even going back middle of January, we haven't seen anything really below that. It's nice to see that we have not followed this this descending level that I put up, and it is looking like we are starting to get a little support stepping in. Probably about the 1450 would be about as far as I would risk. But looking that we did get down 1340, that would lean me more towards the $14 mark or the 1350s. So I'm going to kind of pop over so I know that on the bull puts. So the 1350, 14. So we got support stepping in. You know, at those levels, 1350, we have ran down and touched that before. So it's possible for a $50 collateral to maybe go after a 13-cent premium. That's, you know, oh God, I'm mathing again. That's a little bit over a 25% gain, between 25 to 30% gain. Cassie, thank you. Still working the bugs out. Yeah, it's like I said, Paul, I enjoy riding along and just, you know, I have no problem with, you know, professionals going about their day and just kind of a day in the life of, and, you know, see other people's professions. There is absolutely nothing wrong with that. So I'm going to do some quick math here because I like numbers. Let's see, 12. So that's not bad. Yeah, I'm just running through some numbers. Just you know, I've often said, you know, I always talk about, you know, making sure you have a trading plan, knowing your risk, knowing what you're looking for, and I'm just kind of looking through, running some numbers and figuring, you know, potentially if I move into certain positions, how they look in the long run and the potential gains that I could get against those. And I do have some freed up capital. It's amazing me who you know, usually has all my capital tied up covering stop losses. It's like I've got some free capital. I've got some more trades I can make. But that's, you know, that's why we're here. We're here to make money. So, of course, you can buy, hold, and wait for your position to open up. There's absolutely nothing wrong with that. But I like to go out and attack. Hey, Josh, welcome to the live stream, man. So yeah, I'm actually looking at the $13.50, $14 bull put spreads. It's bouncing between $12 to $14 premium per contract. I'm looking at it because where is $14? Let's open this up just a bit. So 14. right in the middle there. We are holding up nicely. It's got about a 75-cent buffer right now, and that 75-cent buffer is just on the high end. Because remember, when you're playing a spread, you only lose everything if it drops down below both of your levels. So as long as the 1350 would hold up, I would still be making money even if it dropped below 14. In order to lose 100%, I'd still lose a bit after a certain break point. But you don't lose everything until the entire contract is out of the money, which means it has to drop below the 14 to lose everything. So that's an important thing with spreads, knowing where exactly your windows are, and I'll actually bring those up right now, just so we can look a little bit more in depth. So $13.50, $14. So we're going to go ahead and grab those. We're going to look at them on the graph. I don't know why it does it like that. And because I am a seller, I like to sell. Yeah, so it'd be right at 1386, 1385, depending upon where I got in at. That is the break even on each contract. So as long as it stayed above, as long as it stayed like 1390 or above, I'd be making money on it all the way up to 14. Hey, how does it know? No, I was actually going to do more than 10 contracts. Because remember, these you're only entering into for $50. So, the old numbers about, if you had $100 to enter into a contract, well, because they're between the strike prices, there's only 50 cents, you're only paying $50 premiums, or $50 collaterals, which is why you're collecting less premium. And that's why I said when those 50-cent increments opened up, it makes you more flexible on how you can play your contracts. People would laugh, but I bought one more AMC to lower my average. There is nothing wrong with going one share at a time to average down. Depending upon your broker, Cassie, you could literally go through and, if you knew your monthly budget, if you had so much you could invest into the market for a month. I know now. No flack for this. I do use Robinhood. I've stated this before. Robinhood, hey Toad, how's it going? Because of how flexible their options are. I do. You can go through. Webull, and they have 8 or 10 preset options you can do. You can do butterflies, condors, iron butterfly, iron condor, verticals. You do all those fun things. But there are advanced strategies like the broken wing iron condors. There are other strategies out there that you just can't do on some of the brokers because you have to be able to customize your contracts. And that is the main reason I'm on there. Well, mainly because it was the first one I was able to get in on, and this was before I knew anything about what was going on with AMC and GameStop. But when I got into options trading, I was looking at other brokerages, and they did not compare when it came to what types of spreads I can get into, what types of patterns I could build. So yeah, it's I just like the flexibility of it. And where did I start with? Averaging down. So yeah, Robinhood, if you are using them, I don't know about other brokerages, but they should have some form of recurring investment. If you know how much you have available per month, you can literally tell it every day the market is open, buy $5 worth of AMC. And every day at the same time, it'll go through and it'll do a purchase, it'll do a market purchase order for $5 every day the market is open. And right now, depending upon where your average is, you would literally be very slowly averaging down every day. Now, I tend to not, I personally don't like that because I can watch, I can see where the charts are for the day, and I can go in and say, build a market order or build a limit order to where if it runs down to this price, buy a share. If it runs down to this price, buy a share. So, you can use limit orders to fine tune and, get in where you want. But if you're like me and your average is I think my average on AMC is 38. So I've got a high average on AMC. I'm up in the mid to high 30s. But so for me, I could sit there and do $5 a day, and every day I'm averaging down unless we get a nice good another run up. So yeah, that's I'd never laugh at someone getting buying one share to average down. There's absolutely nothing wrong with that. You're improving your position, and if it does run up to you bought it around $15. Well, if we MOAS up to $1,500, you you 100x that one share. So every share you have is more money during the MOAS. So yeah, looking at anywhere above $14, I get the maximum amount. Doesn't matter. It could rip to the moon. I'm still going to be making the same money. It's on 10 right now. I can drop it down to 1 just for ease. So I'd be making $14 per contract, no matter what, no matter how high it runs. The only change is when it drops down below 14, all the way down to 14.86 it is right now, because it's at $14. Yeah, $14 would be 14.86 or 13.86. That would be the break even on it. Anything below that, I will continue to lose money until it hits 13.50. At 13.50, I lose 100%. I lose at that point. At that point, that's the max loss. I can go ahead and close out at that point. I sold to open. I could buy to close and exit the position right there. So yeah, that is, we are on a nice upward channel, and so I am looking around. Right, AMC popping? Let me get back in on the 1 minute here. Okay, not really. It's just the way everything. Okay. A couple key stocks all jumped at the same time. That's why I was looking at it, and all of a sudden my P&L took a huge upward swing. It's just because I've got like 5 positions that all started running at the same time. So I thought it was AMC starting to run. I was like, wait a minute, there's something I need to be looking at right now. That's there's nothing wrong with having a nice a nice portfolio with a lot of different positions in a lot of different sectors. But you get so focused on AMC that when I open it and I see huge gains, I'm like, holy shit! I go check AMC, and it's like, okay, it's not running. It's just a combination of everybody. But yeah, I kind of would like to decide today, but I probably will hold off until Monday, just to see. I want to see how the market opens. I want to see how we go into close today. Because if we look at, let's go back. Okay, we're on AMC options. We want single in the call side of the house. Oh, that's 7 days out. We want today. There still is a potential for a push down. They're going to be fighting us for 15. If you just look, you got to go all the way up to the $18 mark before you see, before you see 5 digits again. So I look for them definitely to fight for that 15 at the end of the market, and depending upon how much downward pressure they can, how much selling pressure they can add in, because that is looking at the rest of the options chain. If they can fight and take 15 easily and hold and secure their position, they may not try to push through the 1450 range. They may not, they may look at it and say, run a cost analysis and realize it would cost them more money in shorting shares to drive it down through those levels than they would actually save from positions that they probably already hedged for. I am fairly certain that the 14 and 1450s, these have already been purchased and covered. They already have the shares to cover these contracts right there. The 15 have probably also, you always hear people talking, people want the gamma squeeze, people want, option. If it ran up, these 18s, they may not have, those may not be hedged for already. So, you always want to see, you hear people talking about the gamma squeeze. They want to see it run up and a whole bunch of contracts, get put in the money that aren't already covered. So yeah, if it starts running towards 18, now of course options contracts, options are T+1, which means they actually would not have to cover these until Monday. So just because we run up and we're looking at these go in the money and everything, doesn't mean they would have to purchase them today. They could actually open Monday and try to short and try and get through and manipulate the not manipulate, but try and play the settlement period to make it not as detrimental for them if they had to go out and purchase those. Yeah, look at got that happy little 2050 right there. 99 contracts, 95. Yeah, it was. You can look at it and see where the new contracts have been entered. That's kind of odd. Nobody at $8 on calls. That's kind of weird window right there. I don't have the money to, but it would be funny to go out and buy calls just so that one contract would be mine. But I wouldn't do that. That for the most part, unless we got a huge run up, it'd be throwing the money away. Next week is starting to fill out a bit. 8 contracts at. Yeah, it looks like people are slowly money's going into those 50-cent increment contracts. So, anyone have any plans for the weekend? I know I am going to. My son, his school is doing a rigatoni dinner night for dine-in and takeout. I think they're raising money for a graduation night party for at the school. So I'll be having rigatoni on Sunday. And for those who heard before, I just over this past weekend I finished up one of my courses for work. One of the courses I need to get promoted to the next level. And it was yesterday or day before I filled out the paperwork to get the final course I need for promotion. And I got notification today that I have been enrolled in the course and I can start on it at any time. So I might be doing a little bit of classroom stuff this weekend just to see how that course looks. Granted, it's stuff that I've pretty much already do in my job, so hopefully the course goes by fast. Snowmobiling tomorrow morning. Plan to put on at least 100 miles. That's cool. Actually, depending on where you are, that's cold. I know yesterday when I left the house it was negative 35, so when I say stuff is cool, most times up here it's cold. Let's go into PROG calls. Not this week, we want next week. Concert at night at the House of Blues in Chicago. Okay, cool. I didn't know Chicago had a House of Blues. Now this is interesting. Oh, I would actually need it higher than that to hit my break even. Sleeping a lot of hours, plowing the last day or two. Yeah, sleep is that's my favorite part of the weekend, is sleep. Unless it's one of those weeks where I'm on 24-hour on call, and then for some reason I don't seem to sleep that good when I know my phone can ring at any hour of the night and drag me out of a warm bed, out into the bitter cold. So those are even money. those are down. Those are down. I'm looking at calls on PROG just as far as doing covered calls and knowing where my break-even point is. Sleep in, visit the horse, get grocery store. Other than that, don't have plans. Yeah, I know either tonight or tomorrow night I will probably be watching episode 6 of Book of Boba Fett, because that one just came out. I just the other night watched episode 5, the one where Return of the Mandalorian. So I'm excited for, because there's only the episode from this week and the next week's episodes. I think it's only 7 episodes long. Now see, these are a lot better here. So $1.50, 14 days out, $1.50 strike turns into $1.64 if it gets executed. If it doesn't get executed, that's, $14 in my pocket. Yeah, and so yesterday somebody had mentioned that they had gotten another, that a new subscriber had come in on the channel. Come to find out, we actually got 2 new subscribers. We are up to 72 now on the channel, so that's exciting. Of course, I challenge everybody, I'd like to challenge y'all every day to bring a new friend in, to let someone else join our community and see what we're all about. That is very tempting on PROG to sell some covered calls right there. Little bit of extra capital. And really, it's a position that I'm not too. AMC is my main focus. So if I can nickel and dime on a different stock, then there's absolutely nothing. To me, there's absolutely nothing wrong with that. If I can sit there and use my position in PROG to generate more capital for turning around and buying shares, because it is almost to the point for every contract of PROG that I went out and sold, I could almost pick up another share of AMC. Now, granted, like I said, these are 14 days out, so my shares would be in limbo for the next 14 days, which means if we got a run up and I decided to sell, well, I wouldn't be able to sell until I bought to close the contract first. And if it was running up past, I would have to pay more than, I have to pay more than I received to close it. And how far do we run? No, maybe. I would do the whole position. I like to only do 25% of the position. Y'all know the numbers I like by now. But yeah, if I did 25% of my position, or even 50%, because as I said, PROG is not my primary focus. Now see, if I did these, I would actually end up, based on my average, I would actually be losing money based on my average. That's why I skipped over these. Granted, if I did the entire position, I'd be losing money. If I did part of it, as far as my average goes, I would lose a bit, but I would still be, when you look at FIFO, first in, first out, I would actually be up on my old shares. If I entered in all my old shares, which were at a different mark, yeah, I may end up doing that. So anyone else got good trades going on? I mean, we're definitely a community channel. That's one thing for sure. Doge, I would like Doge to wake back up again. Kind of get in. I'm bouncing around here, kind of seeing end of the week for me when it comes to trading. It's always weird for me because there's usually good stuff happening on the weekend or on Friday going into the weekend. The problem is, I'm afraid of, when Monday kicks off, Mondays can be quite volatile. Everybody coming back from the weekend, and things can really run up or things can really get nailed down on that first day. So it's a lot of times I like to wait until Mondays to enter or exit positions, just because of you could potentially, if you get huge spike down at the opening of the market, you can really use that to your advantage to go in and make a lot of money off that volatility. And as you can see on Doge, I need Doge back up around 16 cents. If Doge could gain 2 cents, and that would, I'd definitely move up. I'd probably drop a lot of my Doge position just to shift that money into areas where I can make more money with it. It's not a large position, but it's still some capital. It's tied up. I just I'm already at a loss, but it's not really turning into more of a loss. It's kind of a neutral loss right now. It's hit a certain level and it's just kind of hanging out there, not really getting too worse, but not getting too better. It's just kind of sitting there neutral. Now, if I took the capital, moved it into a position that started making me money, well, yeah, it's okay to take a loss there, but we're not, for this position, we're not talking a lot of money. Shib, on the other hand, I'm very, very, very disappointed in Shib. I had to scroll up 3 times to. You killing me, Smalls? Oh, I need to. That's why it looks goofy. Jump on the 5-minute. Really? After all that, okay, we're gonna jump on the 1 hour. Oh, okay, there we go. I want to be able to see both here. Yeah, I hurt myself on Shib. I ended up averaging up. I should have just sat back and wait, but I was looking to increase my position, and so I bought on a dip, and then it dipped more, and I bought more on a dip, and I bought more on a dip, and then it just decided it wanted. At one point, I realized no, I'm not buying no more dips, but it was already roller coastering down past my average at that point. I was waiting for a little excitement, waiting for it to run back up. I might swing it around a bit. If we drop down, it looks like we hit. Wow, we dropped down to 17. Wish I would have seen that. 17, I really would have. I could have really averaged down seriously on that, and then it would have dipped further. Of course, that's the way it goes sometimes. Bitcoin. Oh, Bitcoin over 40. On its way to 40.5K. Nice. Like I said, I haven't had a chance to really look at anything today. I've just been a really busy morning for me here. Working on a project that I started on. I started on yesterday, and this morning kept working on it, and then realized I had to get some more parts for it, and I actually had to go to a different area to get those parts. So a good amount of driving. Let's see. I saw Josh said ETH almost $3,000. Yeah, ETH almost $3,000. That's real nice. I have 8 standard breed horses that own me and live on my farm with me. Oh, what you're saying, Paul, is that your horses let you live on their farm? I wish my mare was in my yard. I loved when I could look out the window, see her now over an hour away. Oh, that's a bummer. Having to travel an hour just to see a family member like that. And I'm the type of person where pets are family members. I know a lot of us, a lot of pet people are like that, but then there are some who pets are just pets, and it's like no, pets are like your children. Is this still the? We're on the 1 minute. Wow. Yeah, that early market excitement on AMC. Wow. Hey, Shredda, welcome to the live stream, man. Morning, Frank. A little late, dude. I'm just waking up, still jet lagged from West Coast. Hey, nothing wrong with that. Happy seeing you in here, man. Yeah, so AMC, yeah, that's AMC looks like it might want to just trade sideways into the afternoon, into market close. But like I said, we've got to pay attention to AMC as we're getting closer to market close because we know they're going to be fighting to drop us below 15. The horses own you, you don't own them. Yep, that is. My mom had a Lipizzaner mare back when I was, early. What's that word? When I was, what do they call it, a tween? Like when I was 11, 12, 13. Since I was a kid, my mom had a horse, and yeah, it was. I used to go, every morning on the way to school. I would stop by. It was. She was 3 or 4 blocks away. One of the doctors my mom knew, he had a large piece of land and had stables there. So I would go on the way to school. It was right on the way to school walking, and I would stop by and I would feed the horses in the morning on the way to school. So yeah, it's they own you, and they're also family members. So Shredda, I think that this is your first time here in the live stream. I think this is the first time you've popped by. Because I mentioned it yesterday, and you said you were screenshotting it and would have a look and everything. So yeah, just went over a bit of the option stuff earlier. I'm hemming and hawing on some contracts on PROG. Just looking to generate a little bit of capital. I'm also looking. I've got some freestanding capital that isn't involved in any stop losses or securing positions. So I just have kind of a little bit of cash on the side, and I'm looking to go through and maybe see about collecting a little bit of cash going into this coming up Friday and next Friday. Just nickel and diming them, but generating a little bit of capital here and there. No big swings. The stuff I go over here, Shredda, is more about slow and steady winning the race. Finding a way to generate that smaller income revenue that is a little bit more stable than going out and just straight up buying calls and buying puts and taking taking huge risk, all or nothings. She was 2 skin and bones and pregnant when I got her back when I was high school. She's in her 20s now. Wow. Definitely had her for quite a while. So yeah, looking at PROG 14 days out, $14 received per contract, and I can use that as an additional stop loss. So generate revenue off a position that I don't care if I get exercised on. Yeah, everybody welcome Shredder to the stream. Yeah, so what I'm thinking about right now is if I go and take my PROG position, if I take 25 to 50% of my PROG position, enter into covered calls, collecting $14 premium per contract for 14 days out, I can turn around, go to AMC for next Friday, and look at bull put spreads at that $13.50, $14 mark, which will net me another $14 per contract. Now, the entering in on these, I would probably set a stop loss of $25 per contract just in case. You'll know I like the stop losses in order to preserve capital. So yeah, that would be a multi-leg two-stock strategy, because y'all know normally I'd be doing covered calls on AMC, but just with how AMC has been and the potential for a rapid run-up, really how far. We'll go back over to AMC for covered calls, and we'll look at not strangle, single options for next week. Okay, single calls next week. So looking at it, if we go off of this week, now, right now, looking at it, the 20s are the only marks that are above that 5-digit mark. Those are the only ones above 10,000 are at the 20. So the next truly safe mark would actually be the $20.50 strike prices. So if I was going to do covered calls on AMC, I would go at the $20.25 or the $20.50 covered calls. I would do bull put spreads off the 13.50 to 14 spread, and I would do 14 days out. I would do covered calls on PROG, covered calls for the $1.50 strikes. So yeah, that's these are the types of things that It doesn't look like much when you say, oh, at $14 a contract. Okay, well, if you're entering 10 contracts at 14 and you're rolling that over and using that on a stop loss where you're taking another 10 contracts and doing 14, well, that already, if everything goes your way, just off those two blocks of 10 contracts, you're already looking at almost $300. Then you add in however many covered calls you would want to do, earning another $10 per covered call on top of that. So you can see, it doesn't look like much when you look at an individual contract, but when you start getting into a rotation and getting a feel for how you like to trade, and just, where your limits are, what is your risk, how low of a reward are you willing to take to stay a little bit safer? I mean, it really does give you the potential to make some money and try to stay as safe as possible when you're making it. The only thing that worries me is the covered calls on AMC, just because how low we are. If it starts to really run, the stop loss is going to be triggered super fast. And on the stop losses, because those were $10 premium collected, I would probably stop loss those at 15, just to be safe. Taking off the premium you received a 50% loss. Now, for each person, weighing your own risk versus reward, that's just something you have to look at, something you have to plan on. So, Shredda, how has your day been? Any options questions? Because I know you were asking a Claybro stream, and pretty much he covered everything that I thought you had or that you were asking. But this is options for pretty much any level, whether you're entry level, if you're looking to do multi legs like put spreads and credit spreads, if you're looking to do like butterflies and condors and stuff like that, we go over. Sometimes we go over that if people are interested in it. A lot of people are looking for single options or for two leg options. Hey, DD214, welcome to the live stream. Still on calls next week. Yeah, I think if I do this, I will hold off on the covered calls until sometime Monday through Wednesday. I'll take a little bit less money on the covered calls just to not have as long waiting on them. But yeah, that's one thing, Shredder. When I'm doing options, I am not a fan of buying options as far as buying calls and buying puts. I am more of the type I like to sell options because at that point when you're selling, time works on your side. The longer a stock trading sideways, you're just making money when you're a seller of options instead of buying. And looking at it, the 2050s and 21s, you're actually collecting the same premium. I could almost try for the 2250s at $8 per contract. So if you look, there's a whole lot of space, but you're not that much of a change in premium from the 2050s all the way up to the 22s. You're only looking at a $2 per contract difference for getting a whole lot of safety. That is a lot of your risk management. If you're willing to give up another dollar or two but gain a couple dollars worth of buffer between the current price and your strike, that's you're building in a safety blanket at that point. Afterwards, I searched around and saw a few videos. I'm actually okay with calls and puts right now. Hey, that is awesome, man. I'm definitely glad you found the information you needed, and get more comfortables, and to sell them back is just all you're doing. If you buy, all you would do is sell the exact same position. And a lot of brokerages, if you start in the future messing around with spreads and stuff, a lot of them will simply have a close button. If you buy to open, you just click to close and it would automatically go through the steps of selling to close. Yeah, a lot of brokerages they have smart buttons built in to make it easier. But yeah, if you bought an option position, to close it, all you do is sell that exact same contract, and that closes it. How's my arch nemesis, the SPY, doing? We want 10 days out. $2 above current strike, so 52. No, those premiums are way too high. So there are courses out there on options trading and how to day trade and stuff like that. Pretty much what they're going to tell you is take the SPY, whatever your current price is, add about $2 to $3 to it. So that'd be this range right here. They're going to tell you go about 10 days out. You go 10 days out. They're going to tell you look for a premium around $200 to $250. And you buy that position and run up and you sell your profit that day. Well, looking at it, so we got our current price, strike price, $2 to $3 up on strike price 10 days out. We're not near that premium price. So you'd actually be overpaying, and the potential to lose would be a lot higher on it. So if you look at your delta, you would need it to run up, but if it ran down, you're losing anywhere from $43 to $46 per contract. That's off a $1 movement. We've seen the SPY, just the other day, the SPY dropped $4 in one day. Well, if you know how to delta gamma together, run through those numbers and realize how much money you're losing, you'd be losing almost $200 right away on a $4 move. So, and the SPY is my arch nemesis. What's going on here? Okay, for some reason it wasn't scrolling. AMC trading sideways into the. I still think that $25 or that $15 is going to be at risk in the afternoon. Yeah, 10,400 contracts in the money. All these premiums are almost worth nothing right now. So, did anybody have a quick question? Because it is getting to be about that time. I have to go back to my 8 to 5 job, my regular employment. I cannot, depending upon where the MOAS goes, I cannot wait because I would like this, I would like live streaming to turn into my regular job. Make my own hours, hang out with awesome people all day. Because I certainly enjoy my time hanging out with y'all, hanging out on the channel. And even on the days like where we're just on here and we're talking about soccer, we're talking about Formula One, football, we're talking about things outside of the market. If something starts happening, of course, jump in, start doing analysis on it, see what's going on. But sometimes it's just nice to hang out with y'all and just have a good afternoon and good lunchtime. So let's real quick. I want to throw up a real quick line on here. So we got that low. I'm going off these ones right here, not that little spike down. We did have that spike down, which technically does count, but they're my lines, so I'll put my lines where I want them. Oh, whole bunch popping in. I put Facebook to drop 45 by and call on Pfizer, $14 Pfizer at 85 to a snap call. It's going to 200. Seeing the Pfizer sell before the strike. That's what got. Oh, okay, yeah. So you've got a couple different positions, and yeah, definitely identify. Make sure any positions now because you're buying. Stop losses aren't that. Stop losses will be easier to manage because you don't have to have capital standing by for them. Yes, it's good just to hang out, just busy with work. Things are crazy. Yeah, that's my day has been crazy as well. I will try to be in on Claybro stream, but it's just been so busy. I hardly got to listen today. But I want to thank everybody who came by today. Cassie, DD14, Shredder, Paul, Josh. Who else do we have? Ugandan Toad. Thank all of y'all for coming by and hanging out just a bit. And it's hard for me to find time after work to really jump on stuff. I do like doing after work streams and everything. I'm going to try and do those more in the future, but certainly cool hanging out with everyone. I hope everybody has a good weekend, has a safe weekend, and I want to wish all of you good health and good trades, and I'll see you over on Claybros a little bit later on.